Dear students, we welcome you to our classes. Today's topic is accounting concept. Accounting concept refers to basic assumptions and rules, principles, conventions, traditions. Basically, these are unwritten rules, work as the basis for recording of business transaction and preparing accounts. We are hoping to discuss few of them following with some exercises. Business entity concept. This will indicate the separation of business entity from its owner's activities. In practice, owners are the people who conduct the business, and also they have access and control over all the resources of the business. So they may use some of them for their personal use, which will not be recognized as business transaction. Therefore, it will be dealt separately. Prudence concept, an intelligent approach. That is to say, income and profits will not be recognized unless it is fully earned, whereas the expenses, as you foresee, if you foresee a loss, provisions will be made if it is with some certainty. Historical cost is the actual purchase price of an asset. So it is expected to be maintained in certain circumstances. When it comes to non-current assets, the accounting standards demand that historical cost had to be maintained for the total existence of that asset. Let's move on to some small exercises. The accounting concept or convention which in times of rising prices tend to understate assets value and overstate profit. Few options are given. Going concern means continuity of the business uninterrupted, at least for a foreseeable future, that is minimum 12 months. Prudent concept is the intelligent approach. Realization is after the income is fully realized to recognize. Historical cost is the answer. Let me explain to you. Say a purchase price of a machinery is 70,000. The present market value of that is 100,000. So every time when you show this at 70,000 in the balance sheet, accounts remain understated. Similarly, the relevant depreciation charges also will be lower, therefore the profit will get overstated. The next question, in a financial statements, inventories are valued at the lower of cost and net realizable value in the statement of financial position. Duality refers to double entry, historical cost to the actual prices. Matching means matching the expenditure and income. For an example, if you are taking income of 12 months, the expenditure also should be 12 months. It can't be different. Since none of these are answered, the answer is D, prudence, where the cost is not going to realize at its value and going to be less. So there is a loss possibility. As you foresee, you'll have to recognize as per prudence concept. The next question is, you are the accountant of ABC Limited and have extracted a trial balance at 31st October 2014. The sum of the debit column of the trial balance exceeds the sum of credit column by 942. Suspense account has been opened to record the differences. After preliminary investigation, failed to locate any errors. You have decided to prepare a draft final accounts in accordance with the prudence concept. Suspense account balance would be treated as, few options are given. Since in the trial balance debit side is more, it would be started with the credit balance. Since no errors were located, that credit balance will remain. Answer A and C is referring to debit balance accounts as namely expense and assets. So this cannot be the answers. B is referring to income. income will not be recognized unless it is clearly earned. Therefore, that cannot be the answer. Therefore, the answer is D. Next MCQ, a business has a good reputation. The owner wishes to include goodwill in the financial statements. Accountant advises against it. Which accounting principle is the accountant applied? Business entity is the separation between the business and the owners. Going concern is continuity for foreseeable future. Matching is matching the criteria or the periods. So prudence is the only one left. Goodwill will realize when the business is sold as a whole, not as piecemeal. In this case, goodwill is not realized, so as per prudence, this will not be recognized. Next question is, as at 31st March, M Traders recorded 25,000 as electricity expenses for the month of March, but the payment was made in the month of April. What accounting concept? Answers. Entity concept is separation of ownership and the business. Going concern is continuity. Prudence concept is intelligent approach. And this is clearly a accrual expenditure, already incurred but not paid. The next question is, H Limited has a land in Kent and it's shown in the statement of financial position of H Limited at 5 million. However, the market value of that is 6 million. What accounting concept? Consistency is the uniformity of application between each accounting period. Not that you use one accounting principle in 1 year and another in another year. Same principle is continued to be used. Matching concept is matching of criteria. Going concern is continuity of the business. Therefore, answer is historical cost, actual cost. Next question is, if the owner of a business take goods from the stock for his own personal use, the accounting concept to be considered is prudence is intelligent approach, capitalization is making the expenditure into assets, money measurement is the term used for monetary unit. Since the stock taken is for personal use, it will come under separate entity concept and will be treated separately. D is the answer. The next question is, the accounting convention that dictates the non-current asset should be valued at costless accumulated depreciation rather than their enforced saleable value. Mark that word, enforced saleable value. Enforced saleable value is relevant when the going concern is impaired. You will be forced to sell at any price. Therefore, the answer is D, going concern. The final question is, making bad and doubtful debt provisions and valuing stock on the same basis in each accounting period. Mark that word, in each accounting period are examples of the accounting concepts. Bad debt provisions will come under prudence. Valuing stock and bad debt provisions the same basis over a period of time come under consistency. Therefore, the answer is C. Dear students, there are many other accounting concepts which will come in a separate videos, and we request the students to do more and more exercise like this to make it more clear. Dear students, as you all know, these classes are provided to you by our YouTube channel, SL Account School. We kindly request you to subscribe, share, promote it, and like it. Thank you very much.